A 90% chance of a recession. That is the prediction tonight from a top economist, Torsten Slok, painting a dire picture of Trump's trade war and the implications, saying it's pushing the U.S. economy to the brink of full-blown crisis. He writes that in just weeks, quote, the consequence will be empty shelves in U.S. stores in a few weeks and COVID-like shortages for consumers and for firms using Chinese products as intermediate goods. And the administration tonight not giving much of a reassurance when pressed on this prediction.
Are you worried about empty shelves?
Not at present. We have some great retailers. I assume they pre-ordered.
Those great retailers were all just at the White House, some of the biggest ones. CEOs of Walmart, Target, and Home Depot, they warned Trump in that meeting that his tariffs could lead to product shortages and more. Barclays tonight is echoing the warnings in a memo to investors, writing, we expect a sharp slowdown and a likely U.S. recession in the coming quarters. All of it comes as tonight we're learning Jamie Dimon, the CEO of J.P. Chase, reportedly told investors just days ago, according to the Wall Street Journal, that a best-case scenario is a mild recession. It's a daily drumbeat of warnings now coming from people who know a lot about the economy, and it has Americans worried. Our latest poll out this afternoon, finding a majority of Americans, 59%, say Trump's policies have made economic conditions in the U.S. worse.
All right, let's break this down without the fluff. You're probably hearing chatter about tariffs, supply chains, and the economy, but it's hard to tell what's real and what's media noise, right? So here it is, straight, simple, and no sugarcoating. First, the China situation. We slapped some heavy tariffs on Chinese goods, and now, a bunch of American companies are pulling back on orders. They're basically saying, yeah, we're not paying that. Even the guy running the Port of L.A. said they're expecting a 35% drop in shipments. That's not a hiccup. That's a full-on choke.
Really frame it for us. How much volume has just dropped off in the last few weeks?
Yeah, about a third of the import volume, which means give or take about 50,000 20-foot equivalent units gone off the arrivals coming in next week.
So from next week is when you expect to see this really hit?
That's correct, and that matches up. The announcement's back on April 2nd, then on April 8th, a little bit of a change on everybody, ex-China, Mexico, Canada, and those arrivals are coming at us this weekend.
We'll, of course, dedicate time to your port, but I'm just wondering how you're anticipating this rolls and ripples through the economy from here, how it hits trucking, when this turns up on the shelf. What's the distance, the time from when you see a drop-off in volume and when we, as consumers, see the shortages?
Right, so CEOs are telling me, hit the pause button, right? I'm not going to import any more at these kind of prices. Let's wait and see. I don't know if it's going to be 2 hours, 2 days, or 2 weeks till I get some clarity. Then, hiring. Off the table for right now. Capital investment, pause. And the retailers are telling me that realistically, with even the 10%, I'm going to have to pass it on to the consumers.
So how much is this really coming from all over? It's not just about China. This is about really global trade coming to a standstill until there is a much greater degree of certainty and a much lower tariff rate than even the baseline that's been put out there.
Yeah, when I was last with you all, Lisa, I said global trade's going to slow, economies will follow, and that's exactly what we're seeing. Back in November, so many of us were wringing our hands about 4% inflation. We've just added 10 percentage points to imports coming out of Southeast Asia for our port, and these unbelievable numbers out of China.
How much are you going to see a real decline in dock workers if this goes on?
Yeah, this is the question. So the trucker hauling 4 or 5 containers today, next week, she probably hauls 2 or 3. The dock workers are no longer going to see overtime and double shifts. They're going to probably work less than a traditional work week, starting right off the bat. Every 4 containers mean a job. So when we start dialing this back, it's less job opportunities.
And what happens if we get a deal?
If we get a deal, it's going to take about a month. Let me walk you through that real quick. About 2 weeks to get the ships repositioned around these major ports, from Qingdao to Shanghai to Xiamen, load up all those containers, and then another 2 weeks to steam across the Pacific to get to us.
Retailers like Target, they've reportedly stopped placing new orders from China altogether, and when imports drop, the trucking industry feels it next. Less stuff coming in equals less stuff to move equals drivers getting laid off. Simple math. And it's not just rumors, the Port of L.A. already said it out loud. Arrivals are way down. That's one of the busiest ports in the country. If they're getting quiet, something's up. Now the bigger picture, the economy.
U.S. trade war with China, another round of tariffs taking effect this week, expected to raise prices on so many of the things we buy. Beijing says that it's, quote, evaluating possible trade talks with the U.S. after the U.S. reached out multiple times. But there's still a long way to go, with China insisting that Trump first eliminate that whopping 145% tariffs on Chinese goods. ABC's Christian Cordero is here with more on some of those changes that we could see. Christian, good morning.
Hey, Janae, good morning. That add to cart button might soon bring you a little bit more pause. The Trump administration has closed a tariff loophole that affects packages from China and Hong Kong with a value of $800 or less. That's some 4 million packages shipped to the U.S. per day that are now subject to a 120% tax or a $100 package fee. The fee is set to jump to $200 in June. So when we look at clothes, for example, think fast fashion from websites like Shein and Temu. The new tariffs, if entirely passed on to shoppers, means a $10 shirt could go up to $22. It's a big if, with a lot still uncertain of how this exactly will play out. Temu initially said it was bracing for price hikes, but now tells us it's transitioning to a model that relies on U.S. sellers, and that pricing for now remains unchanged. Janae.
And Christian, what about the expected rise in car prices?
Right. So as of 12:01 a.m. today, a new round of auto tariffs has been implemented, this time targeting imported car parts. Most imported auto components will now face a 25% import tax. The added cost could amount to tens of billions of dollars for the auto industry, expenses that are likely to be passed on to American car buyers and owners. Gio.
And Christian, what about baby products and toys? Because they're expected to be hit hard too, right?
They sure are. And not just products from Chinese companies. Strollers and car seats by City Mini, Graco, Up a Baby, and others are expected to see a 20 to 30% increase, according to retailer Albi Baby. Munchkin says it's set to raise prices on 90% of its baby gear, and that reflects a greater trend here. An industry group says 90% of core baby products or their parts come from China. You mentioned toys. 80% of the toys we buy come from China.
The latest numbers? The US economy shrank by 0.3% in the first quarter of 2025. It's a sharp turn from the 2.4% growth we had at the end of 2024. It's the worst drop we've seen since 2022.
All right, so obviously this is just moments after we learned that this GDP number came out. It did show a drop in growth, a contraction in the economy, first that we have seen in years, in fact, and it's a sharp reversal from the 2.4% growth we saw in the fourth quarter. So obviously this is a White House that is stepping out to defend its policies on the economy in a moment where we're waiting to see if the first deal comes through on tariffs.
Yeah, we were looking at this. Quarter 4 was 2.4% growth. Quarter 3 was 3.1. Quarter 2 was 3.0. And now we're at negative 0.3%.
And it's not random. Why? Because companies saw those tariffs coming and rushed to import goods before they kicked in. That created a weird spike in imports, which actually drags down GDP. Now that rush is over and everything's slowing down hard, businesses are playing it safe, holding off on hiring, cutting expansion plans, and bracing for more hits. Economists are already dialing back their growth forecasts for the rest of 2025. Most now expect somewhere between 1.4% and 1.9% growth. Last year, we had 2.8%. So yeah, that's a downgrade. So is the media lying, honestly? No. Doesn't matter if it's Fox, CNN, or MSNBC. They're all saying the same thing right now. Ports are slowing down. Truckers might be next. Certain products could be harder to find. Prices are likely going up. And yeah, the economy's losing steam. You don't need to be a conspiracy theorist or an economist to see the pattern here. You just need to pay attention. Here's the straight talk. Shipments from China are dropping. Shortages are expected in certain categories, especially electronics, machinery, and everyday stuff we usually don't think twice about. Prices are gonna creep up. Tariffs are just taxes with a fancier name, and we, the consumers, end up footing the bill. The economy is slowing down. The data is already showing it, and forecasts say it'll keep dragging. Now, does this mean we're headed for full-on Mad Max grocery aisles tomorrow? No. But it does mean we're entering a season of higher prices, tighter supply chains, and more uncertainty. Bottom line, Don't panic. But don't sit there with your eyes closed either. The system's wobbling. Might be wise to brace before it tilts.
So it's taken a while for the tariffs that President Trump imposed a few weeks ago to actually kick in, but now they are kicking in.